Hello everyone, I hope you are doing well in these extraordinary times. Welcome to the Fintech Finance Virtual Arena where we're hosting you today. I am your host, Editor-in-Chief, Founder, and I just say King at FF News Fintech Finance. And today we're going to be having a real look into what the future of FinTech is going to look like. Joining us today, first of all, we have Neil from Currency Cloud. Neil, tell us a bit about yourself. How are you doing today?
I'm very well, thank you. I'm Neil Drennen. I'm the Chief Technology Officer at Currency Cloud. I've been with Currency Cloud just over 6 months now. Prior to that, I was the CTO at 10x Future Technologies. And before that, I spent sort of over a decade in VP engineering roles at places like BBC Worldwide, Virgin Media, and eventually Amazon Video. So I'm quite new into the world of financial services, but my major goal was to sort of apply large-scale distributed computing solutions into financial services problems. So that's kind of the thing that I've been doing over the last few years.
Absolutely brilliant. I'm so glad you actually said that as well, because that's a nice, succinct way that you want large-scale solutions into financial services. Absolutely, that's the one thing, and I know I say this again and again, that comes up is if something is working in financial services 99.99999% of the time, I mean, that's not good enough. It's one of those things that needs to be absolutely bulletproof for every single transaction. Also joining us today, we have Jonny from Workato. Jonny, how are you doing today? Whereabouts in the world are you?
Yeah, I'm based in London. So first and foremost, thanks very much for having me on, Ali. So Jonny Gaffney, so I'm the regional lead for financial services for Workato in the UK and Irish market. So if you haven't heard of Workato before, we're an enterprise integration and automation platform. Personally, I've been with the company now the best part of 18 months or so. So I think in every other company, that's a relatively short period of time. In Workato world, at the rate we're kind of growing, that's a bit of a lifetime. So I think I was maybe sixth to join us in Europe and one of the first in the UK. And I think we're up to 65 people now. So it's in Europe anyway. So it's really growing rapidly. And really pleased to be here to talk with you guys. So thank you very much for having me on.
Absolutely. It does come down to all of that integration. I've always been impressed I've always been disappointed when there's certain companies and they, for example, will get a license or something and just stick that there, use it out the box and not actually try and make it a bit more custom. Whereas you have other systems that are a lot more primed to work with that specific need. With that in mind, I want to talk about the challenger banks. I love the challenger banks. I say as I very strategically take a sip from my Starling Bank coffee cup. As a lot of these challenges are gaining market share, and we're starting to see, particularly in some geographies, Nubank is a great example. We're starting to see an acceleration of growth in nice sort of broad strokes. What are the major challenges that these challenges are going to have on the horizon? Neil, can I go to you first, especially with obviously some of your background work at 10x, but now with your Currency Cloud hat on?
Sure. The way I kind of see it is the challengers have got a big capital problem. So at one end of the spectrum, the challengers have to acquire customers that are typically been with incumbents for a very long period of time. They're difficult to move, they're costly to acquire, but those challenger banks run at a fundamentally lower operating cost than the incumbents. So they've kind of got the advantage of being nimble, agile, working with new technologies, fleet of foot in terms of the products that they provide out to market. But their big challenge is it's capitally intensive to be able to acquire customers and entice people to move away from the incumbent banks. The incumbent banks are at the other end of the spectrum. They have a large number of customers that have been with them for a long period of time, but it's extremely costly to be able to run their infrastructure and their technology operations. So if you look at people like JPMC, they spend north of $10 billion a year on their technology operations. It's the single biggest cost line. And in a world where interest rates haven't been so great for a while, the only way that you can really drive profitability in the bank is to really attack the cost base. And I think predominantly that ends up being a technology and a people and a process type solution to that issue. So I think at one end of the spectrum, you've got incumbents having to really address their cost base. At the other end, you've got challengers that have really got to ensure they've got enough capital to pull and entice customers away from the incumbent banks. So, it would be fascinating to see who kind of wins out in the middle ground between those two ends of the spectrum.
That's a great example as well with JP Morgan, particularly with I mean, I'm a big fan of Chase UK in terms of the card because, well, I'm not allowed about it. I'm abusing their 1% cashback and their 3% on everything. They are literally trying to pay for customers, but they've got that capital reserve. But off the back of that, Jonny, I kind of want to get your thoughts in this. And is it what are some of the challenges, not just for the retail banks? Do you think that on the retail side they're also facing the same challenges as they are for SMEs?
Yeah, to be honest with you, I think even more so in some cases. I think first and foremost, consumer expectations have changed so drastically over the course of the last 10 to 15 years. We as consumers really want information on our hands immediately. We want things to happen straight away. We need speed, we need agility. And that's really important. And that's, part of the reason why consumers I've seen tend to move from some of the more traditional high street banks to these digital banks. But somewhat of the challenge with for the digital banks is that they're scaling so rapidly, they're moving so quickly, and often what we find from a technology perspective, and we're quite lucky in the fact that we get to see lots of these different organizations and see patterns emerge across all of these different organizations. And what we find with this speed of scale that they're going through is that we find that they're buying in products and services that are very good for certain stages of their life cycle. So as a startup, for example, certain products are very good for that. The challenge comes when they very quickly start to scale, and whether those pieces of technology and those elements of their technology stack are really capable of scaling with them and continuing to grow as their customer numbers increase, as their number of employees increase. And the ones that have that agility, the ones that have that kind of mentality to adopt change and change quickly, those are the ones that we anticipate are going to be the ones that scale the fastest. Now, that being said, traditionally maybe the high street banks have not been able to adapt to change quite as quickly as their digital counterparts. And so in order to keep with the times and keep progressing forward, that kind of mindset really might have to shift.
That's an interesting case there in terms of scale. I feel like it was about 3 weeks ago, the infamous Viola Black went into administration. I don't know if you recall these guys, the Move Over Monzo team. Their big splash of marketing on that, but for all of for everything about them, their telephone customer service was second to none, because it was always the same person who knew every customer individually who would answer the phone. Unfortunately, you can't scale that up to beyond 100 people or so top. So as you end up, when you see some incredible figures coming out the likes of Revolut, as you see that expand, you need to kind of keep that in mind. Can I just get you to expand on that? Because as they're from almost that kind of operational side of things, how well placed do you think these challenges, these fintechs are to go on, scale and thrive in the future? Jonny?
Yeah, so I think first and foremost, very well placed, typically because of the mindset they've adopted in creating, the organizations that they have. But it's interesting. You mentioned that use case a second ago of that really personalized customer experience. I totally believe that that's critical to scaling. And you're right, you can't scale a single person interacting with the same customer every time you ring up. It's really difficult. But what you can scale is the experience, and this is what I was kind of talking about more in terms of information at our fingertips. Having when you contact a customer service agent, for example, them immediately having all of your customer information at their fingertips, in order to be able to talk to you in a personalized, tailored, non-robotic way. That's really, really important, because people really value that customer experience. And so those are the sort of things that we at Workato, for example, those are the sort of elements that we really look to scale for our customers, because that is so critical in kind of developing.
So Neil, can I get your thoughts here, just getting from that kind of architectural operational side of things?
Yeah, so I mean, I think if you look at the history of banks, kind of they grew up with the branch, and then got added, telephony banking, then web banking, then mobile banking. These were typically vertical silos that were added on organizationally into the bank, and so consequently there was a lot of duplication in the underlying architectures to be able to deliver the service, and they were treated as quite separate things. Now, a number of the tier one banks have this problem then, because you've got this organically grown architecture that didn't think about what problem set are we trying to solve holistically. And so making changes in that's hard, especially if you want to do something across channels, because you've got to make changes into the branch, into the telephony, into the web, into the mobile space. Whereas, now when designing and architecting a cloud native platform, you start with the architecture first. You apply, what's called inverse Conway's law to then map the team structure to the architecture to deliver the thing more efficiently. But you're not starting with, a very complicated spider's web of technologies. You're starting with the opportunity to do things in a common and consistent way. That gives you the ability to scale through common processes across the organization. And that, I think, is a fundamentally different competitive advantage point for the way that the new sort of wave of technologies are being applied through cloud native technologies into fintechs. It's very hard for incumbent organizations to break apart those silos. And I agree with Jonny's point in that the customer experience is key, but underneath that customer experience are typically a set of legacy platforms, some of which were built in the 70s and 80s. And most, incumbent banks have sort of done what I call the top and tail architecture approach. They've gone and quote unquote digitally transformed by adding a new mobile layer and maybe an API layer at the top of the platform. And then they've gone and done the analytics at the bottom to try to get better customer data, but they've not tackled the core problem, which is the core part of the bank, right? And that's, multi-year projects, expensive, challenging, risky, all of the above, but actually slows them down in terms of their agility, because the core of the data for their customers sits within the core of that banking platform. And so that's the big challenge, I think, of incumbents. But, the new guys in terms of the fintechs that are growing up quickly, being able to apply cloud native technologies enables them to scale much faster. Because you're not dealing with those types of legacy mainframe technologies that were order of the day back in the late 70s, early 80s.
I don't know, Neil. See, I've heard you can just sprinkle a bit of cloud on it and then easy peasy. that there we are. Or just throw a few buzzwords on top.
I wish it was as easy as that.
You mentioned something there. Let's go into cloud. And again, I'm obviously joking about the sprinkler, but how kind of critical is it being cloud native or even moving to cloud native? And you said that it's quite hard for incumbents to break out of that kind of siloed approach. Why? I mean, it's going to be a lot harder in the future. So why is it so hard now?
It's hard because I think you've got decades worth of technology that has been built and customer data that maybe didn't have strong data quality controls around it. To be able to move out from those platforms onto new ones is challenging. You've got some parts of the world where they're training graduates coming out of school, out of their university degrees in COBOL, because the people that built the original platforms have either retired, having earned enough money contracting for the last 20 years, or they're getting to the age that they just don't want to be doing it anymore. And that's not really sustainable in the world that we live in today. So I think there is a big change that kind of has to come. The complexity is in data migration. It's in being able to move from your legacy estate into cloud-based platforms. And there's a number of architectural approaches you can take to do that by taking components off one at a time, moving them across onto cloud, and taking sort of a slower risk-based approach. There's other companies that say we're going to spin up an entirely new cloud native platform, and what we're going to do is prove that works with some new products, and then over time we're going to migrate our existing customer base onto that cloud platform once we've proven it in some use cases. And I think a number of large institutions are thinking about those different approaches. But the fact that they're thinking about it now, and it is a conversation at board level and at CEO level, is a big shift that I think has happened in the last 5 years or so. I don't think it was so prevalent 5 years ago. I think now it's an organisational imperative to come up with a strategy and an approach that you're going to adopt to do this, because you simply will not be competitive in 5 years' time if you don't do it.
Jonny, I imagine you guys at Workato, this is none of your bag, is it? Bringing in automation and linking different systems together. Talk to me a little bit about cloud. I mean, it's got to be do or die time for you. Got to move to the cloud now, right?
Yeah, I think it's really important. Whether it's do or die is, I think we're moving towards that stage. But I think first and foremost, being cloud first or at least cloud ready, we see as a key indicator of things that we've already talked about in the past of how easy it is to scale, how easy it is to be agile in your approach. It was really interesting, hearing Neil kind of speak there about the top and tail approach that he talked about and why it's remained, the conversation's being had, but why it's remained kind of at that point for a while. And I think that the interesting thing about that is that it is, often seen as such a big project for, to move, that kind of middle piece towards the cloud and rip and replace, quote unquote, rip and replace, existing pieces of technology. And so it has to be a gradual kind of staged move process, as opposed to a one and done kind of shift. And I think that's really important. And that's kind of the approach that's being taken across a lot of organizations. The interesting thing is at a senior, I was chatting to someone, within a particular a Swedish bank, to be honest with you, the other day, and he was saying it raised a really, really interesting point. I don't know if it's true or not, but one of the core reasons could be perhaps the average tenure around senior leadership positions within IT. It's such a it seems to be decreasing somewhat from what it was kind of 10-15 years ago, and the shift to move this technology is such a great shift. That actually there's a lot of pain that an organization, especially a more kind of traditional organization, will go through to make that shift. And actually there's much quicker kind of quick win projects that get a lot of kind of limelight and excitement very quickly. Whereas actually by delivering this, there's a lot of pain that goes alongside it. And actually it really needs the right leadership and the right kind of impact to be able to make these projects successful over an extended period of time. And that's when, as I say, that's one of the kind of things that I've thought about as to potentially a reason around this. But it's really interesting that you talk about cloud, because you're right, more organizations are moving to the cloud. The majority of these digital businesses are cloud first. It's such a key indicator, whether you're mobile enough to move to the cloud as to the success of an organization. Really, really key.
That's a really good point there. I'm curious to know, so you have some of these speedboat banks, the likes of Newten in the Netherlands, Chase in the UK, Mox in the Hong Kong, etc. Do you think that because those projects are perhaps they're not as scrutinized as your quarterly results, do you think that gives them that kind of, those speedboats gives them the edge to actually take that long-term view, Jonny?
Yeah, potentially. I think that, as I say, it's really important, that kind of quick approach. As you kind of talked about, you've got this kind of, when it comes to quarterly results, obviously you're massively scrutinized. A lot of these kind of digital banks are also private. Still they haven't gone into the publicly traded as yet. There's somewhat less scrutiny around that. I do think it still comes down to for traditional banks that have operated in a similar way for an extended period of time. It does come down to the fact that the impact that these kind of changes, these core changes, make in a really short period of time have. And you're right that the scrutiny on things like annual results, like profitability, that's under the microscope a lot more for those types of organizations.
Excellent. There's the tweet right there. I always try, whenever doing these, I'm thinking, yeah, if I'm on the audience, I'm going to be tweeting these bits out here. Neil, I want to let's talk a little bit more about kind of cloud and automation in finance organizations, because it's fantastic. It is fantastic. But how is that measured? What are some of the kind of KPIs behind cloud and automation from your perspective?
So I think, if you look at it from an end consumer point of view, availability, latency, error rate are kind of key metrics that you kind of look at for the customer experience. And automation has played a significant role in improving availability. Gone are the days of a private data center where you're doing an active passive failover between two data centers that you'd spent several £billion building that were 30 kilometers apart with a moat around them in the event that someone might drive a lorry into the data center. These were real things at some point in time. Now we're obviously running in the cloud. It's typically on a Kubernetes setup, which, based on technology that Google built to run billions of containers around the world. That's self-healing. So it identifies if one component goes down, it brings another one up in its place automatically. It dynamically scales based on the load profile or custom metrics that you set up. So automation has played a significant role in kind of the run side of the operation to improve the key metrics of availability and latency, particularly under peak load conditions and where you've got those big spikes that might not have been previously predicted. The systems can now adapt to those much better than they used to be able to. But then you look at sort of on the business processing side. If you look at payments processing, if you look at foreign exchange, if you look at collections, the level of automation and replayability of messages, which previously would have had to have been manually scrutinized and manually replayed, has increased significantly as well. So I'd say the error rates have reduced as a result of automation in the processing side of the platform, and reduced significant amounts of operational overhead by people having to either manually rekey data or scrutinize something individually. I think those have been the big changes.
Jonny, can I get your thoughts there, particularly around some of the changes in automation that we've had in this fintech revolution?
Absolutely. So obviously we see this quite a lot, and it's interesting because you talk about KPIs and what are the key KPIs around automation making a difference, and scalability is certainly one of those KPIs. But in our kind of view, it's not the only KPI, right? There's a few others. Top of the list that comes to mind for me, anyways, is ease of access. So what I mean by that is a low technical barrier to entry for automation. If you look at some of the changes that have happened, automation, certainly at a business level, has traditionally been kind of developer heavy, code centric tools and technologies that mean only a select few within an organization can actually develop new automations and new processes that can be automated. And that means that there's a bottleneck there, because whilst we're trying to develop automation, you have to create a ticket for someone else to do it. You have to iterate that process over and over again until it runs. And then, by the way, when it's in production, you've still got to continue iterating going forward. And that's really difficult. So having a low barrier to entry enables people within the business to be able to start building and developing these automations and building automation from what they're seeing on the ground on a day-to-day basis in order to scale and improve process and build these efficiencies within organizations. Now, there is one kind of caveat to that, which is the third kind of KPI that I would kind of refer to here, which is all around kind of security and governance, because whilst it's very well democratizing this ability out to the business, if you remove this ability, you remove the kind of security and governance layer that having a kind of centralized kind of control point has within the organizations, you run into all sorts of different difficulties. We talked around, for example, the increasing kind of level of kind of security and compliance and different regulations that these types of organizations have to contend with at the moment. So kind of ungoverned data flying around a business is really, really difficult to control and contend with, and can often lead to problems. So, there has to be this kind of democratization of automation out to the business, which is really, really important. But remaining this governance layer is also really crucial. Otherwise, an ungoverned scenario is really difficult to kind of maintain and progress with, and that limits this. That in turn limits the scalability that we talked about before.
Let's unpick that bit around governance there, because I mean, obviously that's a week-long discussion in its own right. But just sort of in sort of broad terms, does having new entrants into the market, challenges, etc., having a focus on being cloud-based, having a focus on automation, do you think that with these various data regulations in place, do you think it's making it a little bit tougher now for these organizations to come in and get that first grab a handful of customers first? Or do you think it's something that they're better equipped with than perhaps some of the incumbents?
Sure. So from our perspective, I mean, data security is absolutely paramount, and effective, robust and compliant integration is really critical to that. And that's become really challenging over the course of the last few years. Consumer behavior and actually employee behavior has changed so dramatically. You know, we all, my own personal opinion is there's increasingly blurred lines between personal and business communication. So if you think about regulated industries and advisors within those regulated industries, every piece of communication, I believe it's for the last 7 years, has to be kind of recorded and maintained for 7 years. Now, I'm sure you guys, as I do, we use LinkedIn all the time, and there's a really blurred line between kind of a personal use of LinkedIn and a business use of LinkedIn. So having that kind of governance layer in place in order to be able to contend with that's really important for things like GDPR and regulatory perspectives. Now, combine that with changes in behavior. You know, for example, employees and bring your own device policies. People are using their own devices on a day-to-day basis, and they're texting people, they're using WhatsApp, they're using other forms of communication, and having to contend with that is only really there's only really the ability to do that with really effective and robust kind of integrations between those different pieces of technology that we're all using. Absolutely.
Neil, as a CTO, I'd love to get your stance on this, particularly around, some of the regulations with BYOD, because the amount of times that we've on this show interviewed people and they've said, I can't access this or this from my work, so let me load up my my personal device. And these are some quite senior people. So as a CTO, what was your take on that BYOD and how regulations come in and the blurring between personal and work?
So I think it's certainly a challenging area, but it's one that we're better equipped now than we were a couple of years ago. And I would say, back to the earlier point, actually, in terms of the whole cloud infrastructure providing a more secure environment. Now we can proactively scan the environment 24/7 against the PCI DSS standards, against NIST standards, against the CIS benchmark. We can put proactive rules in place to mean that if someone breaks one of the policies, that it gets automatically remediated. I mean, you look at the Capital One data breach that resulted in an $80 million fine last year, which is where someone took an S3 bucket and put public data, customer data out onto the public internet. That there's now control mechanisms in place that simply can't allow that to happen, right? It would be automatically remediated. It wouldn't even be, the policy wouldn't allow you to be able to do it. So I think we're in a far better position in terms of observability of security issues on the platform in a generic way across everything that the processes. So I think that's an extremely positive step forward, and it certainly makes it a lot easier than it was a few years ago. I think in terms of the bring your own device piece, corporate IT is definitely one of the major threat vectors that we see. It's something we're extremely paranoid about, I think is probably the word that you would use, and you have to sort of put your approach in appropriately to ensure that you've got the control mechanisms in place to make sure that you're not exposed to that threat. But the tooling is definitely improving in that area.
Do you think, obviously you guys at Currency Cloud are quite international in many ways? Do you think that then having to juggle not just domestic regulations, but then there may be various other ones in different jurisdictions and some obviously conflicting with each other, do you think that that's gonna, as more and more companies start operating on a much more international level, world's getting smaller, do you think that the variety of regulations coming into place is a factor?
There's no question that it drives up the complexity, right? And so we have to be aware of the regulations in each environment that we operate in. And that does definitely increase the complexity. The challenge is that most of the regulations are pretty similar, but not the same. And so it would be amazing from a regulatory perspective if we could simplify that. I think actually we'd get a lot better outcome if we were to sort of spend the time as an industry doing that. The beauty of global standards is that there's so many to choose from, I think is the phrase I like to coin in this one. But it would be great if we could simplify that down a little bit. And it is tough. I think what you do see is data sovereignty type questions where customer data can't be moved out of a given region. In areas such as Singapore, in areas such as the Middle East, there are quite strict data sovereignty requirements around what you can move in and out. In some areas of the Middle East, it's quite strict in terms of being able to even run it in the cloud. And so, the environment is not uniform for sure, and that does drive complexity, but you have to tailor your solution appropriately for each of those different jurisdictions.
How important is offering a nice, simple, streamlined and effective onboarding process for enabling fintech organizations to scale? Both for internal onboarding to enable employees to be enabled and deliver a great experience, but also for customers. As an example, one of the most ingenious onboarding for retail customers I've ever seen is Tinkoff Bank, which at one stage in Russia, to adhere to the regulations, you download the app, you onboard, and within a couple of hours, a bloke turns up on a motorbike, takes your photograph, hands you your card, to adhere to the KYC regulations. I love that kind of lateral thinking to work within the regulations, but also to deliver that customer experience. So let's talk a little bit about the onboarding process, and how we can use that to enhance the customer experience. Neil, do you want to go first with this?
Yeah, I mean, so I would say, there's been a significant rise in platform operators in the eID space, like OnFido, like MyTech, Frankie Financial down in Australia, that have been able to really take a very, very manual process and be able to automate that and apply AI where appropriate to be able to optical character recognition, all sorts of different technologies they're using to be able to streamline that onboarding process. So something that was paper-based that could take weeks takes minutes, and it's all automated and can be verified, audited, checked by compliance, etc., etc. So I think there's been significant inroads that have been made in that area. There isn't, in my mind, one player that has ruled the world yet in this space. And so if you're operating in different territories, then you are likely to be able to engage with the best in breed in that specific territory. So then your question becomes, building a global platform is, how do you abstract that integration so that it's efficient and you don't have to do that same integration many times over? And so you build sort of a common interface to these third parties that enable you to plug them in as you kind of go around the world. So I think it's improved substantially over the last few years. I think on the customer side, on the internal side, onboarding of members of staff, this is a key challenge for fintechs. We've grown over to 500 people right now. We're going to be adding a couple of hundred in over the next year, and maybe more. You've got to get very good at onboarding people to your cultural values, as well as the mechanisms by which they need to use. And I think one of the really important things that successful fintechs get right is that cultural aspect, to make sure that people are joining the company that was the same company it was 2 years ago in the sense of its behaviours and actions. And that's a point that's often sort of not looked at, I think, when considering scaling organisations.
It's always very hard to quantify and to put into ones and zeros a culture. That if someone could do that, fantastic. I think you'll be a billionaire. Jonny, I want you to expand on something that Neil talked about in terms of, again, these various third parties like you guys, and how that works in terms of things like customer onboarding, how you're able to kind of link in there. What's your take there?
Yeah, well, I mean, to be honest, even if we go one step further back and look at kind of automation as a whole and why these two kind of experiences, both the customer onboarding experience employee experience, if we take them separately, are so critical for these types of organizations. If we look at, customer experience first, as we already kind of talked about a few times, customer expectations have changed so dramatically over the course of the last 10 to 15 years. Speed is absolutely paramount, and a seamless experience is absolutely paramount. I mean, just citing a couple of examples, right? How often have we all been on a market checker tool or a price comparison website? It's really competitive, right? There's lots of different ones. And even the smallest thing is a confusing question means that we click off it and we go to something else, right? It's and that kind of pick up, put down approach is rife. Slightly tangentially, away from fintech for a second. I was in the car this morning, listening to the radio, and I was listening to Philip Schofield's new advert of a very popular car buying service. And the big play for them at the moment is that they've reduced their waiting time from getting a new quote for your car from a minute down to 30 seconds. And you think about the shift. Think about how much work has probably gone on behind the scenes to reduce that time by 30 seconds. When you look at 10 years ago, the process for buying, selling your car took weeks, right? And we're talking about, half a minute making it quicker. So, speed is clearly valued and clearly so important. And, we see, effective automation that fits in with what we've spoken about before, ease of access, scalability, compliance, those things as really critical to delivering these really quick and seamless experiences, especially as consumers are picking up new applications and working with new organizations. And because otherwise, as we all know, people are inherently impatient and they'll put these things down. So this is really, really critical. The second piece that we kind of talked about was employee experience. I strongly believe that this is exactly the same from the employee experience side. You've got a really, really saturated kind of talent pool at the moment that people are staying in jobs for a much shorter period of time probably than they ever were. They're much more kind of interviewing companies as much as companies are interviewing them, and it's all very well delivering a fantastic interview process and employee experience and getting someone really excited about joining an organization, only for the onboarding process to let them down. They turn up on the first day, their apps aren't provisioned, their laptop hasn't turned up at their house, they don't know how to log into Slack, they don't know how to log into any other technology, and that deflates the atmosphere. That means that it increases their ramp times. It means it's more difficult to get these people excited about joining a particular organization. So having effective kind of systems and processes in place to make sure that delivery on day one really sets the right tone for how organizations onboard employees is really critical. And the flip side of that, of course, as well, is as Neil mentioned, 200 people joining Currency Cloud, over the course of the next year. It's really critical for those people coming on board and critical for Currency Cloud, for example, I'm sure, to onboard those people as quickly and get them up to speed and working as effectively as possible. And the only way to do that is to shorten this kind of onboarding ramp time as much as possible. We see automation as a key to that, but it's also kind of, as Neil mentioned, I really agree with his point here, the cultural experience of an organization and getting that culture right from day one, that culture of speed, that culture of agility. If people get into that mindset, it really helps organizations to grow and develop. So really interesting to hear you talk about that, Neil.
Excellent. Right, we are running out of time. So the last thing I kind of want to ask you guys is to get out your crystal balls. Let's look at predictions. So what are some of the predictions for the industry going forward, and what kind of tech are we talking is going to be at the heart of fintech companies as we move forward? Neil, let's go with you first. And don't forget, whatever you say, we're going to absolutely hold you to.
Right, okay, so firstly, I think we're going to continue to see cloud native platforms become the dominant mechanism to deliver your technology, and I think those that adopt those technologies will be able to scale and run at a fundamentally lower operating cost than those that don't. I think that's, for me, going to be the first big trend. The second is going to be in AI, and I think AI we're using in pockets of activity around the industry at the moment, but there's challenges around auditability and to be able to prove to a regulator why a given AI model made a decision. Until we crack that problem, I think we're going to be limited in terms of how much we can really scale AI within the industry. And I think, I hope that we'll solve that problem so that we can increase our usage around that, because there's so many use cases that will be possible. I think the third is around driven by end user experience and end user demand, and that's about moving to real-time processing. And I mean real-time in the sense of me working at Amazon as a P95 of less than 200 milliseconds, not real-time payments being 2 hours. I think that we have an opportunity to fundamentally rethink the basics of the financial services sector, and how we can deliver a far better experience than how it's been done previously. And I think we're going to see a similar set of changes in financial services that we've seen in media and entertainment. If you wind back to Netflix providing DVDs, it's almost unthinkable, now to see where Netflix are with their customer base and how they've completely transformed the sector between them and Prime Video, and now Disney Plus. I think financial services is going to have that moment over the next few years, and that level of disruption is going to come to play. So it was the reason I moved into the industry. I think it's going to be quite an interesting ride.
Excellent. Who do you reckon will be the Quibi of fintech?
No, I don't predict that one. That's a step too far.
But, Jonny, prediction time. Where do you see the industry heading forward?
Or from a completely impartial perspective, what technologies are going to be at the heart of the fintech revolution? Well, I really hope Workato will be. I'm only joking. I digress. Look, I think we've been at a really exciting phase of development. Over the course of the last few years, Neil's already mentioned it. The emergence of cloud technologies, the emergence of AI. I think those things are going to really continue over the course of the next few years, and we're really at a really nascent stage of development when it comes to these kind of technologies. If you look at the technologies that are available now, even the technologies that are still at a real incubation stage, I think we're really still at the start of this kind of fintech revolution and how things kind of develop going forward. Cloud-based technologies are obviously a really core to that, and I think that the art of the possible here is really wide. So I'm reluctant to make kind of too specific predictions on where this could go, because I think we could have a discussion probably for the best part of a few days on this, to be honest with you. But it's this is the reason that I'm part of this as Neil is. It's a really exciting phase of development. The art of the possible of where these and what's going to happen next and where people are going to go next. And we're seeing a digital banking revolution where that's even going to go next is really exciting. So I'm looking forward to seeing it, to be honest with you. And I do hope Workato is at the core of it.
It's always crazy looking back like 10 years ago, and we have a series of interns at the moment, and I made reference to the paper forms to do a transfer from one account to another you had to do in branch, and they were like, sorry, what? Having to explain that was quite a little bit eye-opening. Thank you so much for taking the time to speak with us today. I hope everyone at home has got those nice little quotes that stick in the back of your head and make you think, what, actually, I'm going to take action off the back of that. That's what this is always about. Neil, where is best to find out more about yourself and, of course, Currency Cloud?
If you go online, check out the Currency Cloud website, and if you're interested in having a further conversation with me, just drop me a line on LinkedIn.
Excellent. And Jonny, what about yourself and Workato? Where is best to find out more about you guys?
Likewise, just have a look online, have a look at the Workato website. I'm sure you'll find us. And then if you want to have a chat further with myself, please do reach out to me on LinkedIn and drop us a message through that. I'm always available.
Excellent. Well, thank you all so much. I've been Ali Paterson. I'm at Ali Paterson everywhere. So thank you all very much. Take care.